Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, with an update on Nasdaq-100 technical levels, as well as which stocks are leading today's performance. And of course, Chris, it's the usual suspects.
Absolutely. We've had a nice pullback here, dare say correction territory, 10% down move from the all-time high in the index. And the 50-day moving average is holding here. Has been for the last couple of days. We've penetrated it a few times, but we're starting to get a green candle today. The index looks like it's starting to hold up a little bit better. Again, some of that churn, which is healthy for the markets here. I dare say that the correction has been what this index and the markets have needed for a few days, and here we are finally starting to get it a little bit. There's nothing wrong with the stock, with the index right now. The NDX still looks like it's doing very well. A pullback is exactly what's needed. Today, absolutely, the same cast of characters. A few new ones coming in here, like Seattle Genetics, on the back of the news, but it's still the tech names that are leading the way up, the same as who led the way down over a week and a half ago.
Chris, what's so interesting about 2020, despite the 3 to 5% moves to the up and downside that the market has witnessed this year, the speed at which the corrections and recoveries have taken place are quite incredible.
It's when stocks sell off, it's always a race to the bottom. Right? People don't want to be left holding the bag. And a lot of that is short-term traders and technical traders, not so much the fundamental folks, because they're in it for the much longer haul. These are just little bumps along the way. When you see a significant percentage move, it means somebody has a stop loss trigger or trading a technical pattern, and therefore they want to rush to get in, which exasperates the move continuously. And what happens is once that move plays itself out, like it did around Labor Day, remember the NDX sold off essentially 10% in 3 days. That's almost unheard of, right? And the Nasdaq Composite followed suit because of the same market cap constituents. What you're looking at there is just a race to the bottom. And when that happens, it's irrational exuberance, right? Not everyone has investment stocks for the same investment thesis, but when you have a number of people who are in a stock or a group of stocks for that same reason, and that reason starts to not play out or go the other way, they will rush to get out. And that's kind of what you saw back right before Labor Day and right after Labor Day, Thursday, Friday, and that following Tuesday. And since then, the index has stabilized. A lot of that supply has played itself out a little bit, and now you're starting to take little baby steps up again, which is a sign of a healthy index with healthy participants.
All right, Chris, great stuff as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.